My name is Sharon Michaels, and I was asked to interview Ivan Sachs about his business practice, his approach to investing, and the lessons that he's learned over the years that would be helpful to me and really any investor looking to invest in a public company. So Ivan, it's great to be here with you today.
It's good to be with you as well, Sharon.
First, how long have you been investing for clients in publicly traded companies, or as people like to refer to it as the stock market?
I would say about 26 years. So that's a little over 1 year over a century, a quarter of a century.
and in those 26 years, which is a nice amount of time, how has your thinking about investing evolved?
Significantly. Because when you think about it, when anyone gets into a profession, year one, day one, you might have a great deal of enthusiasm and energy, but in terms of experience, that has to be extremely limited. So that was my case. I was extremely excited about applying my love of people and my love of numbers and deciding to get into the brokerage business. And so that's what I went out, was just to go out and meet people. Now, in terms of knowing anything about investing in companies in a practical sense, I'd passed an exam and done, my degree was in finance and in accounting, but there was no real hard experience in terms of investing. So it took time. So I would say that on a scale from 1 to 10, how much I knew in terms of experience, in my first 5 years would be probably very low. 2, 3, 4. But in terms of enthusiasm and excitement, not being jaded, not being cynical, I'd have to give myself a 10 during that time.
But now, over those 26 years, you've got lots of wisdom.
Now I've got lots of wisdom, I think lots of experience, and hopefully I don't become jaded and cynical, because adding the combination of experience plus enthusiasm and experience, it's wonderful that. So what I do in general, if I like the idea of the company, I'll buy a little of that company. Buying a little of anything keeps you interested, keeps you in the game. Now, there's no ways I'm buying a serious amount in that time. It's just a matter of seeing how the numbers work, how everything else works. And I'm a shareholder. If I'm a shareholder, I'll become interested in owning this business. Do I want to really own this business, or do I just want to have a little toehold and I'll decide to extract myself or to go big into it? Our business is an emotional business. When things go up and when things go down, people can get terribly excited if it goes up and terribly depressed if it goes down. Those excitement emotions that are up and down need to be managed. That is where I come into it. I'm helping my clients to manage those ups and downs. I'm holding their hand so that they're not going to be jumping off the roller coaster while it's moving. That's not a very good formula, both in investing and in practical terms.
So your research and your experience and your wisdom gives you the tools you need to help kind of hold my hand through this process.
100%. But I would tell you as well, when you start investing with me, expect 18 months for your account to settle. If the markets are completely, I'm talking about the markets because I'm not investing in the markets, but let's say the company price is being beaten down completely, which are the kind of companies that I look for, normally you can sometimes settle immediately. If you bought them deep down enough and you know that they're not going any further because they are so discounted already, you can settle that account pretty quickly. But again, as I said, if you bought at a higher price, it goes down, not to worry. That's the time you need to add more.
So how much of my wealth should I be investing in you?
That's a very personal decision for each individual person. But again, as I said, some people have they are prone to want to like real estate. Some people like business, some people like art. So people have those categories that you have to develop. If you have a great interest in one area, you'll probably have more of that going towards that. But in terms of how much each individual puts in, I don't know. But all I know, whatever money I do get, it will be invested in concentrated positions. You won't be invested in more than 2 or 3 companies at a time. We're there to make money, but money is made in the waiting. What I mean by that? Money is not made quickly. Quick money gets lost quickly. And I think the idea that if people can become patient and they can trust and verify is also good. Sit down with a person once a quarter, once a year, and see that the confidence level that they have in their investments is meritorious. I think many people can sell a good bill of goods, and I hope that I do sell people on the merits of what really is there. The other thing is I love losses, and I think that's an important thing. I'm not scared to take a loss. If you have made a mistake in your investing, don't live on hope that it's going to go back to break even. Get out of it. If you've made a mistake, you get out of your mistakes, take your loss, and retain the money that you have and invest it properly the next time.
Ivan Sachs, thank you for taking this time
With
today.
pleasure.
Kingsley Advisors, and what's the best way for someone who has more questions to get in touch with you?
We do have a website called kingsleyadvisors.com, which has our contact information over there. And basically we would sit down, we'd find out if there's merit to us working together, and we'd go from there.